Okay, welcome to this segment on the absorption and reloading module. We're looking specifically in this part at trend following absorption. Absorption. Now, specific to trend following absorption, what we're going to be looking for very, very simply is positioning with the trend, with the prevailing trend. Now, obviously, you have to identify the trend first. And once you've identified that trend, you can look for potential areas to buy or sell with the prevailing trend. Now, this is really where the price ladder and understanding the order flow dynamics is where you're going to have an advantage over every other trader in the market. If you are just trading off a chart, you're going to be looking for areas, you're going to be putting in Fibonacci's, in a trend, you're going to be looking for areas to buy, which they don't necessarily need to work. Now, if you have, let's say, for example, an important Fibonacci level that you want to buy, and you can see the prerequisite price action that you know means there's going to be a continuation. So, for example, if we pull back in an uptrend and we find our absorbers somewhere, so if we have theoretically a market that is trending up and then we've pulled back, and then in this region in here, we're seeing absorption before we continue. So we've got this area in here is where we're absorbing, and then effectively at some point, we break this consolidation and continue. Using the price ladder is going to give you that option to actually identify the buyer, the big buyer in the market when he's absorbing. So we're going to look at specifically a setup that we saw in the Bund futures on the 22nd of September 2015. It's around 12:15 London time during the day. That's when we're going to be looking at specifically. If we just take a look at a chart of what that, the area that we're looking at specifically, you can see the market had been in somewhat of an uptrend. We'd had this, obviously we did have this move down. We based out for a bit. We broke that base here, consolidated, had a bit of consolidation again in here. And then on this day, this was our inside day. We had an inside day in here, which is something we'll cover out in a later module. So this is our inside day. We broke that inside day here, and then we started trending higher. What we're looking at specifically on today's segment is the price action that we're going to see in this little area in here. So obviously, from looking at this chart, we can see, we're posting in higher swing lows. We've now posted a higher swing high. And now, since we've taken out this really key area, we've taken out that really key area in there, the market's now in an uptrend, which we're posting higher swing lows and higher swing highs. So we've already identified the very, very key area. Now, if we just take a quick look over and just zoom in specifically to a smaller time frame, so we're going to look actually at the 5-minute, what we're actually looking at on that 5-minute. We had the trend develop from early on in the morning. You can see the market was trending. We eventually got into an area where the market somewhat halted, and this was our consolidation region right in here. Something like what I drew before. Now, the accumulation zone, if this is our consolidation, so this is our consolidation / you could call it flag. This area in here is usually where we're going to see our absorbers come in. So it gets to an area where the buyers no longer want to be aggressive and they don't want to buy the high anymore. It gets to an area where they potentially want a little bit of two-way flow, and they stay passively buying and putting a bit of a floor in the market. So we're going to look at the price ladder and see how we reacted very specifically when we reacted around this little section in here. So we're moving down we're moving down in here. We're looking at this little area in here, where we get down to around these 155.62s. And we're going to see what that looks like on the price ladder and see how we could ascertain potentially an opportunity for us to get involved and trade it. Now, it could vary what your objective of this trade could be. It could be to scalp it. It could be to position with the trend. But let's just take a look at what we see on the price ladder, and then we can go through the potential strategies right after that. So let's just load this up. So we've seen the market had just made a high. Just a quick recap, the market had made a high up here at 155.77s. Our low of the day is way, way lower. If we had to put it way, way lower, we're just, if we put it on the price ladder, you can see we're all the way down at 154.89s is our low of the day. The high of the day we just put in at 155.77. So let's take a look at the price action here. We're currently trading at 155.64s. Bid 63s, offered 64s. Someone's buying into the market here. Someone just sold 25 lots into 63s. Now 125 lots have just traded into 63s. And the bid now is currently at 270, 300 lots. And it's just gone offered at 63s. Someone's just taking it offered. And we're looking at this pricing specifically, in particular. We've got 300 and about 40 lots there, 350 lots at 62s. It does vary as it goes bid and offer, but most importantly, just understanding that we've got that much size on that specific bid. It's gone down a little bit less to about 280, 300, let's say. One lot's just traded in there. We've got a one lot just traded in there. Now it's come down a little bit more, but 50, 100 lots have just traded in there. So it's gone to a smaller size. Just very light on the bid. Got a little bit more size just below it, but look how much we're trading here, 220 lots. And every time more and more trades into it, the bid is actually adding more to it. So with 85 contracts, potentially anyone that wants to sell is getting lured in to sell. We're getting small time frame, either locals or day traders just selling into that bid there, trying to hit that bid, potentially trying to take it offered, but it's not going offered. And every time someone sells into the price, you see we've just taken it offered quickly and it reloads again, adds another 100, 200 on the bid. Now those sellers have probably just realized, okay, this is obviously a big buyer here, let me just quickly cover that position, and we've just gone bid. So from a trading perspective, after we've just absorbed that information and we've seen that there's a buyer there, let's just buy at 63s now. We're trading with the trend. We know that the trend is in our favor. We've just seen someone just lift 228 contracts. Someone's just lifted at that price at 64. Someone just lifted about 228 contracts, taking it bid. And now we're seeing a little bit more aggression. So the market was to whoever that buyer was quite passive of 62s. We went bid 63s, and then we lifted quite a bit of size here. Now it seems as if the buyer's starting to come a little bit more to market. Mixed together with whoever's been selling in that region is now covering, and we're getting a little bit of an auction process off of these 62s a little bit higher here. Let's just see, where we get with this position. We've just gone 2 ticks on side on a 10 lot. That's 200 euros. So we've only got 10 lots. It's not a very big position, but if we have a nice core position, this is where the magic of understanding the price action comes in, because if you've got just a 10 lot in the market, you could take out, let's say, 5, scalp 5 ticks out of the market, let's say between 63s and 68s really quickly right in here. I know I'm going to leave 5 lots at 63s as my core position. I've just gotten filled on my offer there, so I've just taken out 5 lots, and that has given me 5 ticks of reward. Now, essentially, your risk on this trade, is no more than 3 ticks, let's say. Now, effectively, if you're really precise and you're understanding, if you hone your skill and you can understand where that buyer's actually really located. Is it just that one price? Is he kind of building position between 64s and 61s, 63s and 61s? If we know that it's, let's say, between 63s and 62s in this case, which we saw very specifically the market was absorbing at 63s and 62s. I know once um, it goes offered 61s, so once it goes offered 61s and the best offer is now 61s, I'm wrong. So I could potentially have my stop at 60s, let's say. Once it trades 60s, I am out. I've got myself 3 ticks of risk. 3 ticks of risk. I've just taken 5 ticks of reward on half my size, and I've positioned with the trend now. So potentially I could ride this trend higher, and every time it comes to me, I could scalp it. I could, let's say, I'm going to say I've got 5 lots on. I want to keep my 5 lots core position. Every time it comes down to 63, 62s, I'll buy another 5 and take 3 or 4 ticks out. And that way you can continuously scalp as the market's rotating back and forth, potentially higher, comes back, potentially higher, and then eventually we get the breakout. We get that flag formation, and when the breakout occurs, you could potentially get a little bit more aggressive. That's obviously up to you if you want to scale back in aggressively here, buy some as it breaks. But that is potentially a way to trade when you see a trend. So what did we see? What have we seen just now on the price ladder? How can we implement this? What kind of structure and parameters do we have to put this trade into place, to put this trade, as one of our tools in our arsenal? So we mentioned number one, we want to look for, so identify the trend as we did above. We were talking about above. We identify the trend. We just say, okay, we've just broken out a key area. We're making higher highs, making higher lows. Now we've got a trend. So once the trend is ticked, I say, okay, I've identified the trend. I'm looking for a potential buyer now. So number two, looking for buyer. Now, in the event that you're trying to be, this is just from an absorption standpoint. You're not looking for momentum. We're looking just for absorption. You're looking for a buyer that is passive. And reloading. And we saw that at 63s. We saw someone sell into 63s and 62s, trying to take it off. Would be 200 lots trade into it, 100 lots trade into it, and every time someone would trade into it, someone was absorbing it and reloading, adding more on the bid. So you're trying to get more and more size on as it was trading into it. Now, from a strategy perspective, what are we looking at? Just purely. Just bear with me for a second. Now, from a strategy perspective, this is actually just what we're looking for. Now, for how we're actually implementing this, from a strat perspective, we're looking to either join, so a join bid / offer. That obviously could depend on whether you want to be aggressive or not. So if you're passive, you could join the bid that is actually reloading, or B, you could be a bit more aggressive and hit above. And that's what we actually did in this example. He was reloading at 62s. He was reloading at 62s, and we actually hit 63s at market. So we lifted 63s. Conversely, you could have been actually just joining the bid at 62s once you sold the reloading. But I preferred in this kind of situation, it could, once we're getting a bit of a pullback, we could see it come a little bit further back. I'd like to see it actually go, see the absorption first. And then once it's gone bid 63s, I'll try and quickly hit it, see if I can get a little bit out of it, because I know that potentially I might not actually get filled at 62s, so I don't want to miss it. Once it goes bid 63, 64s, I'm paying higher and higher prices. Sometimes you need to be a little bit more aggressive. So you're joining the bid and the offer. We've got C, very tight stop, below absorber. And obviously, D in here, if we can just fit that in, is we want a core position, and then we can scalp around. Now, this is obviously one way to play it. You could, if you're just a scalping trader, you could have just said, okay, I'm going to get in at 62, 63s and take a quick, 3 or 4 ticks just for the scalp, because I know that's a very, very high probability trade. The lower probability than that, based on the price action, is getting in and then looking for continuation of the trend, because we could potentially trade lower through here and find another area of absorption. But effectively, you could build a core position, scalp around it every time it comes to you, and then keep that core position to run it, until the end of the day or over the next 2-3 hours, or until you see the potential exhaustion in the market that you're looking for to get out. So yeah, that's basically a trend, sort of a trend following price action dynamic that you can actually pay attention to, and it's really quite profitable if you can understand this simple concept. It could give you many profitable trades, and it's much more advantageous than just looking for a fib, looking for a level that you think might work, as opposed to actually seeing when the market's actually working and it's working in your favor, pushing, trying to get filled on the bid. That shows you intent, and that's where you want to position with. Thank you.